Hello, investors. It's Don Vandenbord, senior portfolio senior portfolio manager with Revere Asset Management. Today is Thursday, May 25th, 5:09 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. For some reason this week, like this is the third day that I've fumbled over saying portfolio. I don't know what is going on there. Anyway, state of the market, we are in a large cap uptrend, more specifically large cap tech uptrend that got more focused today after a big, really not big is too small of a word, massive earnings beat and raised by NVDA last night, sparking a huge rally in artificial intelligence related stocks. Dow continues to lag, mid caps and small caps continue to lag, so it truly is a bifurcated market. And of course, we're continuing to avoid regional banks and anything related to commercial real estate. Let's check the trend gauge over here. Leaders holding up fine, some better than fine, much better than fine in a lot of cases. And so we've got that flagged bullish. Uh, Short-term 21-day moving average, more bifurcation. Uh, just the S&P and the NASDAQ 100 are above the 21-day moving average. Small caps uh, failed back below it after a nice couple of days above. Dow and mid getting worse. Medium term, this is our 50-day moving average. Tech-led S&P 500 and NASDAQ 100 firmly above, small caps below, taking a trip below. Dow and mid trending below 3 or more days. Long-term 200-day moving average. Dow undercut and held the 200-day moving average today, so hopefully that's a line in the sand for you Dow uh, investors. S&P and NASDAQ 100 firmly above, mid caps hanging around the 200, small caps below. So what happened today, as I said, I'm not sure I've ever seen bifurcation like this on a single day in the market. Um, Mixed close, as you can see. RG8, we've added SPHB, that's a high beta ETF, large cap high beta. We added that, so we've now got 8 ETFs that we're using in our composite. That was slightly down on the day, but it was down uh, really only because of ARK-K being down 2.7%. A bunch of the top holdings in ARK-K, which are not AI related, got smacked today. S&P 500. Here's an example of the bifurcation. The XLK, the biggest component of the S&P, up 3.8% today. The next closest was XLI Industrials, up 1/3%. XLC Consumer Communication was flat. Every other sector was lower. So while this number looks good, it's got an asterisk next to it when you've got 9 of the 11 either flat or lower. Dow was weaker during the day, actually had a decent close, down 0.11%. Mid caps basically flat. Russell 2000, small caps down 0.7. Global diversified 60/40. Stocks up 0.4, bonds down 0.4. Net of the 60/40 plus 0.08%. GROTECTION in-house, we really took advantage of our AI-related holdings on that NVIDIA report, up 1.66% today. And today was an example of why we invest in leadership growth stocks. They just absolutely can smoke the market averages when you get the right market and the right stocks. We'll hit the tail of the tape and charts of interest. There were several other stocks that gapped up on earnings-related news and had nice days. Let's get into it. First, a reminder why we do what we do here at Revere. Protecting the downside is our number one job. Then when the market is in the proper frame of mind, we take advantage by investing in leading stocks in the leading sectors. And right now, AI, artificial intelligence related stocks are reminding me of the 1998, 1999 internet. I'm not gonna call it a bubble, although in hindsight, that's probably what it will end up being. But there was a long move up in these type of stocks for a long time. It ended badly at the beginning of 2000 when their growth moderated. And we're doing some studies on some of the leaders back from the 1999 era. Cisco is one that absolutely comes to mind, as it had a monster run as one of the pick and shovel networking stocks, the backbone of the internet that was being built out at the time. Right now, NVDA is in the driver's seat for leading the AI revolution. But uh, if you want to avoid these, sleep well. That's what we do here at Revere. It's a peace of mind approach. When the market gets back to the right frame, we take advantage by investing in the leaders in the right market. The returns take care of themselves. Right now, the market is, bifurcated, not right, not a bull market. There's a lot of most sectors, in fact, are lagging, but we're focusing on what's leading. So here's your S&P 500. Yesterday, well, let's go back to Tuesday's video. I said, we stopped where we needed to if we look at a 30-minute chart, which was above this 4140 area. And any breakout is entitled to retest its pivot, which is where we closed at the end of the day Tuesday. However, Wednesday, we gapped down back inside of this range, this 4100 to 4140 range, 1% tight range where we hung out for 8 days before breaking out. Spent the whole day in that range on Wednesday. You can see the gap up on Thursday and immediately started selling off, but we found support right around the 4130 area. We tested that level several times today, built a little bit of a base, broke back a 140, back above 4140, pulled back, tested 4140 and held, and closed above it at 4150. Now, certainly not the best thing that any broad market bull has ever seen, but it's tech led. Tech's heavily weighted. The S&P 500 has a lot of rotation. The weaker sectors will feed money into the stronger sectors, and if value is weaker or stronger, the boat tends to uh, balance itself. Constant sector rotation going on. That's why it's difficult to beat the S&P 500 without having uh, a situation where you can overweight in good markets and underweight in bad markets. And that's our approach here at Revere. So bottom line, back above the 4140 level. So we're back above that breakout level. We only spent 1 day below it, but this now becomes a key level. And even more important is this 4100 level. If that gets broken to the downside, we will get very defensive in a hurry. We're still have exposure on greater than the equivalent of being in the S&P 500. That paid off today. There's times in the past it hasn't. As but big trends up in the leading stocks when they outperform, it pays for a lot of the paper cuts that we've experienced this year, and today was an example of that. So what we're looking for going forward, certainly the most important level for tomorrow, 4140, below that 4100. To the upside, 4200 has been a massive level of resistance, and that is the next target for the bulls to wage a battle for newer highs. But first, we've got to get the debt limit settled. We've got to get some clarity from the Fed in the June meeting that's coming up. And tomorrow morning is some key inflation data that comes out that the Fed will no doubt be looking at, and it will absolutely have a say-so in the reaction of the market tomorrow. Keep this picture in mind because I now want to go to RSP. This is the equal weighted S&P, and you can see It continued, equal weighted was down 0.1% today, and it's broken to the downside of that exact range that we've been in, that we tried to break out of. You can see we barely broke out of it above 143 on the equal weighted S&P 500. Didn't make the progress, but that's because the progress was, again, as you know, supported by tech. We broke down through the bottom of this range on Thursday, uh, very similar to the way we broke back into the range on the market cap weighted S&P. Made lower lows today. Not a good look here for the S&P. Let's go to the Nasdaq 100 now, and this explanation is why uh, the S&P is outperforming on a market cap weighted basis, because of how great the tech component is doing. If you want to draw a similar line to this, we broke out. Really, the breakout was here around 324 on the back test. The harsh pullback on Wednesday, we didn't even come back into that range, and now making higher highs today on the back of semiconductors, which you can see very clearly there. Their breakout level was 420. Didn't even test it, as we had an extremely strong week last week on semiconductors. Went sideways for a couple of days, one bad day down, and then just an absolute rocket ship takeoff to the upside in semiconductors. So this explains each of those prior 30-minute charts that I just showed. Let's go back to the NASDAQ 100 on the daily, and you can see the big gap up there after the 2-day pullback. We're extremely extended from the 50-day moving average at 6.4%, but ironically not as extended as we were on 518. So we've got higher highs, but not quite as extended, as we got 7% extended versus the 50-day moving average on 518 last Thursday. Now higher highs, not quite as extended, but it's going to be tough. Uh, you just don't separate that much from this 50-day moving average. Now, this is a market that I've experienced over the last decade. Going back to 1999, I'm pretty sure we'll have seen it uh, much more extended, and we'll be studying that over the next week in-house here. Let's go to the Dow. The weakness continues. Can't get a break. Lower lows on relative strength. Look where the relative strength line is and where price is versus last time. Price made lower lows, but beneath the 200-day moving average. I mean, the relative weakness in this is amazing, and it's because of the components that make up the index and their price. They're at the mercy of Goldman Sachs, Home Depot, and United Healthcare right now. So undercut closed basically right on the 200-day moving average. MDY mid caps failed into the 200-day moving average late last week, early this week. Now multiple closes below this confluence of moving averages around the 450 area, just too much to get through. Relative strength continues to trickle lower. IWM showed a bit of relative strength Monday and Tuesday until it ran into the 200-day moving average. Multiple closes above the 21 and the 50, but now back below both the 21 and the 50. We'll have to see where we close the week here, but for now, big line in the sand at this 180 level and the 200-day moving average for small caps. Let's go to the dollar. This has been playing a critical role as it's been extremely strong. Broke above the 200-day moving average, just trending higher along the ADMA. That's terrible for precious metals. Let's take a look at GDX first of all. Lower lows, completely in a 180 degree opposite direction of what the dollar's doing, making lower lows on this recovery after a failed breakout on GDX. GLD not quite as bad, uh, not even close to as bad actually. Still below the 50 and the 21. Quite a bit of distance between the 200-day moving average, but gold moves slower than stocks. Anyway, let's go with silver, SLV. That doesn't look good either, making lower lows. The VIX now, we got a little stretch to the downside on the VIX. Late last week, early this week, then the debt ceiling shenanigans started. We did break back below the 20 level. You can see that 20 has been acting as resistance. But everybody's going to argue, yeah, it's acting as resistance, and it came down today, Don, because of NVIDIA. What if NVIDIA didn't happen? Well, it did happen, and That's all there is to it. Anything else is a hypothetical, just the way the market moved up strongly a few weeks back when it looked like it was going to break down, and Apple had a blowout earnings report. It trickles through to other components in the market that are tied to that ecosystem, same way it is AI, and it is what it is. I mean, you can invest in the losing sectors if you want to. There's a lot of people laughing at the move in NVIDIA, saying you're going to get crushed. Well, no, because uh, we have a sell discipline. We'll ride it as long as it goes. When it starts to weaken, we'll get out, or we'll take some offensive profits the way we did when it got extended last week. And by it, I'm talking about NVIDIA. Let's continue on, though. I'm getting off on a tangent. So there's the VIX. Let's go to bonds. TLT making lower lows. BND, the broad bond index, making lower lows. TNX, the 10-year yield, higher highs. TYX, the 30-year, higher highs. Still running into resistance here at the 40 level. In fact, the shorter duration yields were up more than the 30-year yield was today. So a little bit of movement in the yield curve, a little bit of flattening in the yield curve. And let's do Bitcoin finally, BITO. Basically flat on the day, hanging on to this 15 level. Is that everything as I check my little cheat sheet here? No, QQEW, equal weighted tech, was positive on the day, 0.54% versus 2.4 on the NASDAQ 100, still outperforming. Equal weighted tech is outperforming the S&P 500. As you can tell by looking at the relative strength line there, but it's the big caps that continue to dominate. All right, let's get to the tail of the tape now. You can pause this here. I'll hit the highlights. The U.S. credit rating was put on a negative watch by Fitch with the nonsense going on with the debt ceiling negotiations, but late this afternoon, a debt ceiling agreement was supposedly close. We'll see. Uh, Day count, we went from 2 days down to 1 day up. We're right on the 80 EMA on the S&P 500, 1 day back above the 21 EMA. Friday morning, there's some key inflation data. PCE, we'll be keeping an eye on that. Expectations, neutral as of the close yesterday, but that was then 20 minutes later. NVIDIA reported, put us back above the 21 EMA, and we stayed there. So flipping our expectations back to positive overall for the S&P and the NASDAQ 100. Big choppy base after the open today, but then we tried to break up, tried to break down. I already talked about that, but holding that 4140 level, that's critical right now. That's the key level that we're watching. We know there will be some reversion to the mean in the NASDAQ 100, and then I'll carry over to the S&P 500. The question is, can some of the other sectors in the S&P pick up the slack? Are they getting cheap enough? Will money flow into them? That's what we'll be keeping an eye on. Sectors up today, semiconductors, of course, software, transports on the downside, gold and silver, oils, 3 defensive sectors, PU&B, that's staples, utilities, and healthcare. Regional banks, retail, and biotech down also. Portfolio changes. Talked about we added to NVIDIA after hours yesterday around 352, so we've got some gains in that. During the day today, regaining the 21-day moving average, we added to SSO, bringing it up to a full size. We still have a partial hedge on against our longs. We also added to DT as it's been tightening very nicely at its breakout range. And we did some offensive selling. You just have to do this from time to time. Sold half of AMD up 33%. It's extremely extended. We'll take a look at these charts when we get to the in a moment here, when we look at charts. We'll also take a look at a couple of other earnings winners. But the bottom line for today, NVIDIA earnings report sparks a huge artificial intelligence tech rally. However, the Dow, mid caps, and small caps all finished lower. We've got our line in the sand. We've got our ranges. We need Dow, small caps, and mid caps to start showing some strength here to keep the bulls satisfied and to assist the market in working its way higher. Let's look now at some key charts from yesterday. We'll start off with NVIDIA, since it's the champ of the day, up 24%, closed mid-range. High of the day pre-market was 399.50. We sold off early. Let's look at a 5-minute chart on this as it looked like. I saw some people saying it's a blow off top, it's a blow off top. Then we made higher highs before flagging the rest of the day. Key level now when you have a big gap up is it should hold the low of the gap up day, which is 366.35. So that's something we'll obviously be keeping an eye on. On the back of NVIDIA, AMD up closed at the top of its range, up over 11%. This is the offensive selling that we did here, 19% above its 21-day moving average is extremely extended. So that's why we sold half, locked in that gain. And it was a 33% gain, but during the same time period, the S&P was only up less than 2%. So this is why we search for these growth leaders that can give you the massive outperformance when you catch them correctly. Locking some of it in, I'm quite certain we'll be able to get back into AMD at a better risk reward area than being 19% above the 21-day moving average. What else do we want to show here? Some more earnings winners. SMCI, not an earnings winner, but got an upgrade, and its fortunes are very closely tied to NVIDIA, apparently. Massive gap up 23% on the day. This has been a huge winner. Nutanix, NTNX, up on earnings, not broken out of the base though. You've got 30 some 30 resistance here. We'll see if that can follow through to the upside. That's a computer software enterprise industry group stock. Elf, another winner on earnings here, up 354%, up 20%, all-time highs through the 100 area. Great volume. After hours today, Marvell, MRVL. This is a semiconductor stock, also AI related. It's up after hours. Let's see, it's trading at 57 after hours, so a big break. It's up here now, and this is after having a 7.6% up day today. Their fortunes are apparently tied to NVIDIA also, as they were up on the back of that. Let's also take a look at some other gainers tied to AI. Microsoft up 3.85%. We own that. We sold some AMD. Meta had a good day too, up 1.4%. That's AI related. Google AI related, up 2.13%. Let's see some other Rambus chip stock up 10.3%, and a bunch of the semiconductor manufacturers had a great day too. Somebody's got to make these chips for NVIDIA, right? Apparently, they've bought all of the capacity that Taiwan Semiconductor has to build their chips for the next quarter. Applied Materials up 7%. KLA is a chip equipment company, up 6%. LRCX is a chip equipment company, up 6%. ON, strong semiconductor company, up 2.7%. ENTG, recent semi winner, pressing against the 100 level after its earnings report. ASML, semiconductor name, up 6.25%. And as I said, Taiwan Semi up 12%, breaking out of this base on massive volume. Again, they're making the chips for NVIDIA. So it's a lot of these companies' fortunes are tied together, both to the upside and to the downside. And with that, we're going to wrap it. As always, love to hear from you. Email don@revereasset.com or my partner, Dan Stewart, if you're interested in coming on board. Dan@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. And with that, I'll wrap up Thursday, May 25th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.